Right now, as of the close on November 26th, Datavault IA Inc. is trading at $2.13. That represents a pullback of 8 cents, or 3.62% on the day. The after-hours market has gone completely flat, holding that 213 level with zero movement, which is arguably more unnerving than a drop because it signals a momentary standoff between the bulls and the bears. When you see a stock like this, a small-cap tech play with AI in the name, slide 4%, the immediate knee-jerk expectation is that the hype cycle is breaking. The narrative on Robinhood stock trading forums is predictable. It's a dilution trap. They just authorized 2 billion shares, or the Bitcoin deal is a gimmick. That is the expectation, that Datavault is just another buzzword-heavy penny stock trying to capitalize on the AI trend before the music stops. But the reality is far more disruptive and significantly less fragile than the chart suggests. While the retail crowd is panicking over the share count increase, they are completely missing the architectural shift happening underneath. Datavault isn't just doing AI, they are effectively building the central bank for the data economy. The reality is that the recent guidance update, projecting $200 million in revenue for 2026, is not a hallucination. It is mathematically backed by the tangible contracts they just signed with heavy hitters like Scilex and the World Boxing Council. This 3% drop today isn't an exit. It is a repricing of volatility before the market fully digests what it means to tokenize real-world assets on this scale. The dilution everyone fears is actually a war chest being assembled for a massive land grab in the data tokenization space. Let's look at the tape. The volume today was elevated but not panic-induced. On Interactive Brokers trading terminals, you can see that the selling pressure was absorbed methodically at the $2.10 mark. This suggests that while day traders were flipping out of positions to capture quick profits from the recent run-up, longer-term capital was stepping in to defend the support. In the world of online investing, it is easy to misinterpret consolidation for weakness. What we are seeing here is the transfer of shares from weak hands, those who bought the headline, to strong hands, those who read the 8K filings. The flat after-hours action confirms this. The sellers have exhausted themselves, and the buyers are waiting for the next catalyst. If you are managing your own self-investing portfolio, you need to understand why this stock is moving the way it is. It is highly sensitive to news flow, and the news flow has been torrential. The most critical piece of the puzzle is the Scilex deal. We are talking about a transaction involving Bitcoin and pre-funded warrants. This is financial engineering at its most modern. By accepting Bitcoin for equity, Datavault is signaling that they are not just a software company, they are a digital asset holding company. This aligns them perfectly with the crypto AI convergence thesis. If you use Fidelity Investments or have a Fidelity crypto account, you know that the intersection of blockchain and AI is where the next $1 trillion of value will be created. Datavault is planting its flag exactly there. Now, let's address the elephant in the room, the authorized share increase. Shareholders approved an increase to over 2 billion shares. On paper, that sounds terrifying. It sounds like your equity is about to be watered down to nothing. But you have to look at the expectation versus reality dynamic again. Expectation: they will dump shares on the open market to pay the light bill. Reality: they need that share capacity to facilitate massive strategic acquisitions and partnerships like the one with Scilex. You don't ask for 2 billion shares unless you plan to buy something huge or merge with giants. This is a signal of aggression, not desperation. It is the kind of move that SoFi investing influencers might roast, but institutional arbitrageurs quietly respect. The partnership with the World Boxing Council is perhaps the most tangible proof of their technology. This isn't abstract data monetization. This is putting sensors and data collection tools into championship fights. Every punch, every movement, every fan interaction becomes a data point that can be tokenized and sold to sponsors, betting agencies, and broadcasters. This is the Moneyball of combat sports. When you invest in Apple stock, you are buying hardware sales. When you invest in Datavault, you are buying the rights to the data generated by human activity. The WBC deal validates the platform in a high-visibility, high-value environment. If they can monetize a boxing match, they can monetize a concert, a political rally, or a corporate conference. The total addressable market here is virtually infinite. For the investor using Schwab Intelligent Portfolios or similar automated tools, Datavault is likely invisible. It is too small, too volatile, and too new. This is your advantage. By the time this stock shows up in a Fidelity mutual fund or a standard ETF, the price will be 10 times higher. You are paying for the uncertainty. The 3% drop today is the fee you pay for entering before the crowd. It is the price of admission to the ground floor. Comment below how many shares of Datavault IA you currently hold, and do you think their revenue projection of $200 million for 2026 is realistic or just corporate hype? Let's dig deeper into the real-world asset or RWA tokenization aspect. The deal with Triton Geothermal and MTB Mining is the sleeper hit of the month. They are tokenizing mining assets and energy production. This is revolutionary because it turns illiquid assets, a mine in Tanzania or a geothermal plant, into liquid tradable digital assets. In a high-inflation environment, investors crave hard assets. Datavault is building the bridge that allows digital capital to flow into physical resources. This is what Robinhood crypto traders dream of, a token with actual backing. If Datavault can become the standard for RWA tokenization, they effectively become the NASDAQ of the physical world. However, we must remain objective and look at the risks. The expectation versus reality framework also highlights dangers. The expectation is that execution will be flawless. The reality is that integrating blockchain, AI, and legacy industries is incredibly difficult. There is regulatory risk. If the SEC decides that these tokenized data assets are unregistered securities, the stock could be crushed. We have seen this movie before with other crypto-adjacent stocks. Furthermore, the CEO selling shares for tax purposes, while standard, never looks good optically. It creates a headwind for sentiment. If you are using a Fidelity mobile app to track insider activity, you might have seen those sell orders and hesitated. That hesitation is valid. But let's return to the guidance. Raising 2026 revenue guidance from $50 million to $200 million is not a tweak, it is a quadrupling. Management does not do that unless they have ink on paper. That number implies that the deals we know about are just the tip of the iceberg. It suggests that the Scilex deal is going to generate massive recurring revenue, likely through the biotech exchange they are building. This platform aims to use AI to value and trade drug development data. If they crack the code on monetizing pharmaceutical data, the current market cap will look like a rounding error. The technical setup on the chart is also telling. After the massive run-up earlier this month, the stock is flagging. It is consolidating in a range. For technical traders using interactive brokers charts, this is a bull flag. The consolidation allows the moving averages to catch up to the price. As long as it holds above the $2 psychological level, the trend remains bullish. The dip today to 213 is essentially a retest of the lower bounds of this new trading range. If you are a user of SoFi Invest, you might be attracted to the story here. And the story is compelling. It is about the commoditization of data. We have spent the last 20 years giving our data away for free to Google and Facebook. Datavault's premise is that data should be an asset class that you can own, track, and sell. Their Information Data Exchange, or IDE, is the marketplace for this. It is a bold vision. It counters the surveillance capitalism model with a data ownership model. Why is the stock down today specifically? Likely a combination of profit-taking ahead of the Thanksgiving holiday and some lingering confusion over the Bitcoin warrant structure of the financing. Complexity often breeds selling. When investors don't understand a deal instantly, they sell first and ask questions later. But complexity is also where value hides. The structure of the Scilex deal minimizes immediate cash outlay for Scilex, but gives Datavault liquid assets, Bitcoin, and long-term upside. It is a creative solution to the liquidity problem that plagues small caps. Looking forward to the rest of 2025 and into 2026, the catalysts are lined up. We need to watch for the first revenue recognition from the WBC deal. We need to see the launch of the biotech exchange. And crucially, we need to see if they utilize that massive authorized share count for a transformative acquisition. If they announce they are buying a major data broker or a specialized AI firm, the stock will react violently. In the world of investment help and advisory services, you are often told to buy quality and consistency. Datavault is neither of those yet. It is potential